Hello students, this is the video lecture series on account of not-for-profit concern. In today's video lecture, you will learn how to solve the problem on not-for-profit concern.
From the following particulars relating to Radha Krishna Charitable Hospital, Pune, prepare income and expenditure account for the year ending 31st March 2020 and balance sheet as on that date. Receipt and payment account for the year ending 31st March 2020. Here, debit side all receipts during the years are recorded, and on credit side all the payment during the years are recorded. Now let's see the adjustment first. Subscription due 2019-2020, this is the last year outstanding subscription, and 2020, this is the current year outstanding subscription. So we have to take subscription 2 times. Second adjustment, subscription received in advance 600 and 150. The 600 is of last year and 150 is of current year. So again 2 times we have to take. On subscription, we have to put 2 more tick marks. So total 4 adjustments are there on subscription. Stock of medicine. This is the last year stock and this is the current year stock. So stock on medicine, again there is a purchase of medicine. So we have to record first stock of medicine and then closing stock. So here on medicine purchase we will put 2 tick marks. Estimated value of equipments, building, capital fund and investment. These are the assets and liabilities which we have to record directly. Provide depreciation on equipment and on building. On equipment there is a depreciation and on building also there is a depreciation. Again equipment is purchased. So 1 more tick mark on equipment. Okay, let's start with the sum. Here heading is from the following particulars relating to Radha Krishna Charitable Hospital, Pune. So our heading will be in the book of Radha Krishna Charitable Hospital, Pune. So in income and expenditure account, first we have to write heading in the book of Radha Krishna Charitable Hospital, Pune. Income and expenditure account for the year ended 31st March 2020 and balance sheet as on 31st March 2020. Now let's start recording first all the assets and liabilities. Here estimated value of equipment 15,000. So in balance sheet first we will record equipments. Amount is 15,000. Then building 40,000. So in balance sheet asset side we have to record building 40,000. Capital fund 1,70,940. It will be recorded on the liability side. So on liability side we will record capital fund 1,70,940. 10% investment 1 lakh. On asset side we have to record in balance sheet asset side we have to record 10% investment 1 lakh rupees. Let's start recording all these receipts. This is the opening cash balance which will not be recorded. It will be recorded in the opening balance sheet. Subscription 52,000. This is the receipt. So this is the income for the hospital. So in income and expenditure account, credit side, that is income side, you have to record by subscription 52,000. Donation, this is the general donation 17,500. So this will be recorded in income and expenditure account, income side. On subscription there are 4 adjustments, so you have to leave some space. at least 7 to 8 line, and then you have to record donation, by donation 17,500. Interest on investment 10%. Interest on investment will be recorded in income and expenditure account, income side after donation, write down by interest on investment 10,000. Proceeds from charity show 8,530. This will be recorded in the income side in income and expenditure account. So in income and expenditure account credit side we will record as by proceeds from charity show 8,530. So we have recorded all the receipts. Now take payment side. Buy medicine purchased 41,000. Here stock of medicine is also given 8,000. So first we will record the stock of medicine, then we will add purchase. So in income and expenditure account debit side we have to record to opening stock of medicine 8,000. Here medicine purchase for 41,000. So again we will add in expenditure side plus purchase 41,000. Now total stock is of 49,000. General expense 1,050. It will be recorded in income and expenditure account debit side. We have to record general expense 1,050. Salaries 23,500 in income and expenditure account debit side. Two salaries 23,500. Then stationery 2,000. So in income and expenditure account after salary we will record to stationery 2,000. Expenses on charity show 550. Again in income and expenditure account. To expenses on charity 550. Then surgery and dispensary expense 4,200. Again in income and expenditure account debit side. To surgery and dispensary 4,200. Equipments 10,000. This is the purchase of equipment. So in balance sheet asset side we have to add in equipment purchase, add purchase 10,000, and total amount of equipment is 25,000. Balance, by balance carried down, cash in hand, cash at bank. This amount will be recorded in balance sheet asset side. So in balance sheet asset side we will record cash in hand 960, cash at bank 13,000. First adjustment, subscription due 310 and 350. This is the last year outstanding and this is the current year outstanding. We have to remember some signs for the outstanding and pre-received prepaid income expense of current year and last year. So let's see. Outstanding expenses or outstanding income. Current year outstanding expense or current year outstanding income will be added in that particular expense or particular income. But if expense or income is given outstanding of the last year, then it will be deducted from the amount. Like that only pre-received income and prepaid expenses of the current year will be deducted from the amount, and if pre-received income and prepaid expenses are given of last year, then it will be added in the amount. So our first adjustment, subscription due 310 rupees of last year. Last year outstanding, our sign is less. So we have to deduct. So from subscription in income and expenditure account, credit side from subscription you have to deduct outstanding of 1st April 19 310. So after deducting you will get amount 51,690, and this is the last year outstanding, that's why it will be recorded in the opening balance sheet. Same adjustment, subscription due 350, this is for current year. So current year outstanding, our sign is current year outstanding, our sign is add, plus we have to add in subscription. So we will record plus outstanding of 31st March 2020 350, and you will get amount 52,040. The second effect of this will be given in closing balance sheet, and we have to record outstanding subscription 350. Second adjustment, subscription received in advance. This is the pre-received 600, and last year pre-received our sign is add. So we have to add. So in subscription we have to add. We have to record pre-received in 2019 600, and the total will be 52,640. And this is the last year pre-received, so that's why it will be recorded in the opening balance sheet. Like that only, subscription received in advance in 2020, that is 150. This is the current year received in advance. At current year received in advance, our sign is less. So we have to deduct this amount, and we will record less pre-received in 2020 150. So after deducting, we have to record amount in outer column, that is 52,490. The second effect will be given in balance sheet. Liability side, you have to record pre-received subscription 150. So on liability side, pre-received subscription 150. Stock of medicine, this stock 8,000 opening stock we have already recorded. This is the closing stock of medicine. The closing stock of medicine will be deducted in income and expenditure account. Expenditure side, here you have to deduct from this stock of medicine. So less closing stock of medicine 11,000, and in outer column amount will be 38,000. The second effect will be given in balance sheet. Asset side, you have to record stock of medicine 11,000, %10 investment. The 10% indicates rate of interest, and on 1 lakh the rate of interest of on investment will be 10,000, which already hospital has received. You can see on receipt side interest on investment 10,000. So this again the interest will not be calculated because it is already received. Provide depreciation on equipments 1,900. Depreciation will be recorded. So on equipment you have to deduct less depreciation 1,900, and in outer column it will be 23,100. Second effect will be given in income and expenditure account. Expenditure side, you have to record two depreciation on equipments 1,900, and on building 1,500. On building you have to record depreciation. So after that in balance sheet, on building we have to record less depreciation 1,500, in outer column 38,500. Second effect will be given in income and expenditure account. Expenditure side, debit side, you have to record to depreciation on building 1500 and total will be recorded in outer column. So we have recorded all these adjustments. Now let's see what is the total of income and expenditures account. The total of debit side. Let's take the total of debit side first. The total of debit side is 72,700 while total of credit side is 88,520. It means the credit side total is more than the debit side. That will be the surplus. So here we will write 2 surplus carried down. Let's find out what is the amount. The total income side is 88,520 while expenditure side is 72,700. So surplus is 15,820. This is the surplus 15,820. So both sides first you have to record same amount 88,520 and then the difference will be recorded 15,820. This surplus will be added in the capital fund. So in capital fund we have to add surplus 15,820 and total amount will be recorded in outer column, that is 1,86,760. Now let's take the total liability side. The liability side total is 1,86,910 and total of asset side is 1,86,910. So here we can see the balance sheet is tallied.
In this sum, you have learned the adjustments related to the subscription, outstanding subscription of last year and the current year, pre-receipt subscription of the last year and the current year, how to give effect, that you have seen in this sum.